Recording of transactions 1. Accounting equation solutions. Problem 4 solution. Presented by Eduxir.com. In this video, we are going to provide recording of transactions 1. Accounting equation solutions. Problem 4 solution. The problem statement is as follows. Rohit has the following transactions. Commenced business with cash 1,50,000. Purchased machinery on credit 40,000. Purchased goods for cash 20,000. Purchased car for personal use 80,000. Paid to creditors in full settlement 38,000. Sold goods for cash costing 5,000 for 4,500 rupees. Paid rent 1,000 rupees. Commission received in advance 2,000 rupees. Let us first prepare the table. Let us have a column for transaction. Analyzing all the transactions, all the assets involved in the transaction can be classified as cash, stock of goods, and machinery. Let us have a column for total. On the other side, let us have liabilities, capital, and a column for their total. The first transaction is commenced business with cash 1,50,000. This transaction increases the cash asset by 1,50,000 rupees. On the other side, it increases the capital by rupees 1,50,000. After this transaction, the business will have 1,50,000 rupees worth of cash, no stock of goods yet, no machinery purchased yet. The total of all the assets will be rupees 1,50,000. On the other side, there are no liabilities yet. Total capital will be 1,50,000 rupees. The total of the liabilities and the capital would be 1,50,000 rupees. That covers the first transaction. The second transaction is purchased machinery on credit 40,000 rupees. Here, it is specifically mentioned that the machinery is purchased on credit. So, this transaction creates a liability. After this transaction, the business will have 40,000 worth of machinery. On the other side, the business now has a liability of 40,000 rupees created from this transaction. At the end of this transaction, the business will have a cash worth of 1,50,000 rupees. No stock of goods yet. The business now has a machinery worth of 40,000 rupees. The total of all the assets will be rupees 1,90,000. The business now has a liability of 40,000 rupees. No change in the capital, and it will be 1,50,000 rupees. The total of the liabilities and the capital would be 1,90,000 rupees. That covers the second transaction. The third transaction is purchased goods for cash 20,000 rupees. As the goods are purchased in this transaction, it increases the stock of goods by 20,000 rupees. Also, as it is mentioned that the goods are purchased for cash, the cash asset will be decreased by 20,000 rupees. This transaction is just an increase in one asset and a decrease in the other asset. Also, just keep in mind that if it was not mentioned that the goods are purchased for cash, it would simply mean that the goods are purchased on credit, and this transaction would have created a liability. The keyword here is cash. Whenever the keyword cash is present, we will consider it as the purchase for cash. Subtracting 20,000 rupees from 1,50,000 worth of cash, the business now has a cash worth of 1,30,000 rupees. The business now has a stock of goods worth of 20,000 rupees introduced. There is no change in the machinery and it will still be 40,000 rupees. The total of all the assets would be 1,90,000 rupees. On the other side, the business now has a liability of 40,000 rupees. There is no change in the capital and it remains as 1,50,000 rupees. The total of the liabilities and the capital would be 1,90,000 rupees. That covers the third transaction. The fourth transaction is purchased car for personal use, 80,000 rupees. The point to be noted here is that this transaction is done for personal use and not for official use. So the car purchased will not be considered as an asset of the business. This transaction can be rephrased as Rohit, who is the owner of the business, has withdrawn 80,000 rupees from the business for personal use. This is just for your understanding. Don't write this when you are actually preparing the table. So this transaction reduces the cash asset by 80,000 rupees. Also, as Rohit has withdrawn part of the capital that he has put into the business, the capital would also be reduced by 80,000 rupees. Let us erase the meaning of this transaction and just use the wording that is given in the problem statement. Subtracting 80,000 from 1,30,000, the business now has 50,000 worth of cash. There is no change in the stock of goods and it remains as 20,000. There is no change in the machinery and it remains as 40,000. The total of all the assets would be 1,10,000 rupees. On the other side, there is no change in the liabilities and it remains as 40,000 rupees. Subtracting 80,000 from the existing capital of 1,50,000 rupees, the business now has a capital worth of 70,000 rupees. The total of the liabilities and the capital would be 1,10,000 rupees. That covers the fourth transaction. The fifth transaction is paid to the creditors in full settlement 38,000. This transaction is related to the second transaction, wherein the business has purchased machinery worth of 40,000 rupees on credit. As the payment is made in full settlement, it is understood that the seller of the machinery has agreed to provide a discount of 2,000 rupees. So instead of 40,000, we are paying only 38,000. As the payment is made in cash, this transaction reduces the cash asset by 38,000 rupees. Also, it discharges the business from a liability of 40,000 rupees. The received discount of 2,000 rupees should be added to the capital. Subtracting 38,000 from 50,000 of cash, the business will now has a cash worth of 12,000 rupees. There is no change in the stock of goods and it remains as 20,000 rupees. The business now has a machinery worth of 40,000 rupees. The total of all the assets would be 72,000 rupees. Discharging 40,000 liabilities from the existing liability of 40,000, the business now has no liability at all. Adding 2,000 to the existing capital of 70,000, the business now has a capital of 72,000 rupees. The total of the liabilities and the capital would be 72,000 rupees. That covers the fifth transaction. The sixth transaction is sold goods for cash costing 5,000 rupees for 4,500 rupees. Note that in this transaction, goods worth of 5,000 rupees are sold for just 4,500 rupees. So there is a loss. Also note that the goods are sold in cash and not on credit. This transaction reduces the stock of goods by worth 5,000 rupees. as the goods are sold for cash, there is an inflow of 4,500 rupees worth of cash and it adds up to the cash asset. Also, as specified earlier, goods worth of 5,000 rupees are sold out for rupees 4,500. So there is a loss of 500 rupees. This should be reduced from the capital. Adding 4,500 to the existing cash of 12,000 rupees, the business now has a cash worth of 16,500 rupees. Subtracting 5,000 from the current stock of goods worth of 20,000, the business now has a stock of goods worth of 15,000. There is no change in the machinery and it remains as 40,000 rupees. The total of all the assets would be 71,500. On the other side, there is no liability in the business. Subtracting 500 from the existing capital of 72,000 rupees, the business now has a capital of 71,500 only. The total of the liabilities and the capital would be 71,500. That covers the 6th transaction. The 7th transaction is paid rent 1,000 rupees. Rent is an expense. So this transaction reduces the cash asset by 1,000 rupees. Also, these expenses have a tendency to reduce the capital and hence 1,000 rupees should be subtracted from the capital. Subtracting 1,000 from the existing cash of 16,500, the business now has a cash worth of 15,500. There is no change in the stock of goods and it remains same as 15,000. There is no change in the machinery and its worth will remain same as 40,000. The total of all the assets would be 70,500. On the other side, there is no change in the liability. Subtracting 1,000 from the existing capital of 71,500, the business now has a capital of 70,500. The sum of the liabilities and the capital would be 70,500. That covers the 7th transaction. The 8th transaction is commission received in advance 2,000 rupees. The keyword here is in advance. When the business receives payments in advance, it owes to deliver goods or render services worth that amount and it becomes the liability of the company. This transaction increases the cash asset by 2,000 rupees. At the same time, as specified earlier, as this commission is received in advance, it creates a liability of 2,000 rupees for the business. Adding 2,000 to the existing cash of 15,500, the business now has a cash asset worth of 17,500. There is no change in the stock of goods and it remains same as 15,000. There is no change in the machinery asset and it remains the same as 40,000. The total of all the assets would be 72,500. The business now has a liability of 2,000 rupees. There is no change in the capital and it remains same as 70,500 rupees. The total of liabilities and the capital would be 72,500 rupees. That covers the 8th transaction. For calculation, the total of all the assets would be sum of cash, stock of goods and machinery. That is, sum of 17,500, 15,000 and 40,000. Adding, we get 72,500. The business has a liability of 2,000 rupees. The capital is equal to 70,500 rupees. The total is 72,500 rupees. The accounting equation is verified as assets are equal to liabilities plus capital. That is 72,500 is equal to 2,000 plus 70,500 rupees. Hence, the accounting equation is proved. Thanks for watching. Eduxir.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.